Now there are some more items which are still left in shareholders equity section, the most important being called as retained earnings. So as the word suggests, we are talking about earnings of the firm, retained earnings, and how much you would like to retain. So let's go back and understand this from the income statement. So say for example, when you start with the income statement, you have sales at the top, and then there is COGS, and then there are other items in between, along with which there is something called interest payments which you do, and finally you have the taxes and the net income. So when you look at this income statement altogether, this is what is being given to the debt holders. Okay, so interest is actually made or paid to the debt holders. So whatever is left over after all the stakeholders have been paid, after the taxes have been paid, this leftover belongs to the shareholders. So say for example, in this case, let's assume that $50 was the total net income. So this $50 actually belongs to the shareholders. So in fact, you can do two things with $50 from the point of view of shareholders. One, you can either distribute this $50 to the shareholders, that can be done, and second, you can retain for further investments. So now if you look at this keyword retained earnings and retaining some funds for investments, this is where it is kind of linked to. So it actually flows from the net income. $50 amount could be distributed to the shareholders and an amount could be retained for investments. So what we have assumed here is that the $50 is the net income, and a part is distributed to the shareholders as dividends. Let's assume that $10 was distributed as dividends, and another $40 was kind of retained in the firm during the year. So how does this get accounted for in the shareholders equity section? So let's try and rebuild our shareholders equity section. Shareholders equity, which we have seen earlier. Common stock, this was $100. Then we had the additional paid in capital, this was $300. We had the treasury stock, this was negative $20, and we also have the retained earnings. So as we have discussed, this retained earnings actually flow from the net income, but only that part which is retained by the firm and not distributed to the shareholders. So here this 40 will flow here, and the sum total will be 100 plus 300 minus 20 plus 40. So this will come out to be 420 as the final figure. So this is how retained earnings can be looked at. Now talking about dividends, this $10 was shared to the shareholders or given to the shareholders or distributed to the shareholders. Now what is the dividends amount per share? We have given $10 as the dividends and the total number of shares that has been outstanding. So earlier there were 100 and now we have purchased 10, that's why we have this treasury stock here. So the total number of outstanding shares is 90. So these 90 will get in total $10. So dividends per share will be 10 divided by 90. So this will be slightly less than $1. So this is also very important. This is called as DPS, dividend per share, which will be in this case $10 divided by 90, dividend per share. Okay. So let's move and discuss the last element, which is again very important from the point of view of shareholders equity. This is called as accumulated other comprehensive income. Let us see what this is and how we can accommodate accumulated other comprehensive income in the shareholders equity section.